Hey everyone, welcome back to my financial focus. In this video, I want to do an investment review of the company PayPal. I'm going to be looking into their business model, their stock performance. I'm going to be reading through their annual report, and I'm also going to be doing a discounted cash flow analysis to figure out what the intrinsic value of their business is based on their current cash flows and their current financial health. So if you're new to the channel, be sure to subscribe and leave a like on this video. Comment down below what you guys think of the video after I'm done with it, and let's get started. So the first thing that I want to do is figure out what the intrinsic value of the business is by using this Excel sheet, which is my discounted cash flow intrinsic value calculator. So first value that I'm going to need is the growth rate for years 1 through 5, and I can find that by going to Yahoo Finance and scrolling down from the analysis tab for PayPal, and I can see right here that the growth estimates for the next 5 years are about 24.1%. So I can put that in right here. For the next 6 through 10 years, I'm going to just be a little conservative and cut that in half at 12%. And we can play around with these values later to figure out what the intrinsic value would be based on different growth rate assumptions as well. For the year 1 free cash flow, I'm just going to go to trading view and then financials, cash flow, scroll down. And for 2020, we can see that the free cash flow for PayPal is about $5 billion. And then for net cash minus net debt, I can find that easily by going to Yahoo Finance, going to statistics, and seeing on their balance sheet that they had $12.39 billion of total cash and $9.69 billion of total debt. Stock ticker is PYPL, and their shares outstanding at the end of 2020 was 1.18 billion shares. So if we put all those values in, we can see that based on this discounted cash flows model, that the intrinsic value per share for PayPal came out to be about $127 per share, which compared to the current share price would make it seem that PayPal is currently a little bit overvalued. But let's play around with these values a little bit just to see what the intrinsic value calculator would put out if we played with the growth rate a little bit. So let's say for years 6 through 10, that their growth rate stayed the same as it was for years 1 through 5. The intrinsic value in that case would come out to about $185 per share, which still puts PayPal at an overvaluation based on their current trading price. But like I've said in previous videos, the discounted cash flows model isn't perfect. It's not a full comprehensive model, but it is a model that we can use as a tool to reference when trying to figure out the intrinsic value. So based on this model, PayPal is overvalued, but it may not be fully accurate. So I would definitely encourage everybody to do their own research before making a decision on whether to invest in PayPal based on this information. So the next thing that I'm going to do is I'm going to go to their annual report and look through a couple of things just to figure out how their business model works and learn more about PayPal, which is something that all value investors should do before they buy into a business. First page that I'm going to go to is page 12, and we can see right here PayPal's financial statement, their annual report. It looks to be a little bit more interactive than some other annual reports that I've read for different businesses in the past on this channel, because they have a lot more charts and a lot more graphical representations of their data points. So we can see right here their performance highlights for 2020. Their revenue has increased from about $15.5 billion in 2018 to $21.5 billion in 2020, and it increased by 22% from 2019. The amount of active accounts they had at the end of 2020 increased to 377 million accounts, and there were about 40.9 payment transactions per active account, which is up 1% from 2019. Not that much, but it's a gain nonetheless. And then their total payment volume for 2020 was $936 billion, up 31% from 2019. So I wouldn't be surprised if that value increased past $1 trillion at the end of 2021. Next page that I want to look at is page 96, which basically gives a business review talking specifically about their revenue generation. And for some of the people watching this video, y'all might not really know how PayPal makes money because many of us mainly just use their free services. But to sum up, PayPal, they generally don't charge their customers like to fund or draw from their accounts, but PayPal generates revenue from consumer fees charged for foreign currency conversion, as well as instant transfers from their PayPal or Venmo accounts to their debit card or bank account. And then they also make money from interest and fees from other credit products. Now I want to talk about some of the risks that are facing PayPal on page 105 when they start going into our risks. And after reading through this, there were three main risks that I saw that I thought were probably the most interesting in my opinion. The first one being that PayPal might struggle from inabilities to keep up with technological innovations in artificial intelligence, virtual currencies like Bitcoin, and also blockchain technologies. The second main risk that I saw was that they may struggle in the future from cyber attacks and security breaches that could cause illegal access to customer personal data. And the last risk that I wanted to touch on was the potential for the utilization of PayPal's services for illegal activity like money laundering, sanctions evasion, illegal gambling, and fraudulent sale of goods and services. So I'll leave this annual report in the description of this video in case anyone wants to do any further research into it. But for now, I'm just going to skip ahead to some of their financial statements. So on page 123, we start off by seeing this little graph that breaks up their revenue. So it gives a quick little revenue breakdown and shows us how much of their total revenue in the years 2018 to 2020 was made up of transaction revenue and revenue from other value-added services. And we can see that for 2020, of the $21 billion that they brought in net revenue, 19.9 billion of that came from transaction revenue. So they are definitely very reliant on their transaction revenue to increase their revenues at the moment. That could be a potential liability in the future for them if they don't diversify their revenues and expand their business. That could be another potential risk, but time will tell. So on this page, we can see the increase in their active accounts, the increase in the number of payment transactions from 2018 to 2020, and then also the total payments transaction value, which increased from 578 billion to 936 billion, which is what we touched on a little bit earlier as well. Now I want to go to their balance sheet, which is on page 145. We can see that from their balance sheet, the total cash that they have on hand, or at least the total cash that they did have at the end of 2020, did not make up a pretty substantial part of their total current assets. So that could be a negative, or it could mean that they are smart in how they're allocating their cash and that they're getting a good return on their capital as opposed to just sitting on it and letting it deteriorate in value from 2 or 3% inflation per year, which is probably going to increase because of the financial stimulus that recently went in because of 2020 and all the events that occurred. The total assets increased from 51 billion to 70 billion from 2019 to 2020, and their total equity increased from 16 billion to 20 billion dollars at the end of 2020. Right here we can see their income statement, and we can see that their net revenues in 2020 came out to 21 billion, but after all of their operating expenses were taken into account, their net income only came out to 4.2 billion, which isn't necessarily that bad. It's about a 20% net profit margin, and that's pretty typical for some businesses, except for businesses that tend to be in the tech sector. But PayPal could also be considered a business that's more in the financial sector than in the tech sector. So it might be a little bit more understandable for why their net income is so much lower relative to other tech companies that typically will have like upwards of 30 or 40% profit margins. But 20% isn't that bad. Next thing I want to look at is their statement of cash flows on page 149, and I'll zoom in a little bit so we can get a better look at it. We can see right here that their net cash provided by operating activities after adding back all of the non-cash expenses to their cash flow statement came out to be about $5.8 billion. And then their total net cash used in investment activities came out to be more than their cash provided from their operating activities at 16 billion. We can see that in large part came from purchase of investments. So they're allocating their cash to try to get a return on it in the future, which is a smart use of capital in some cases. And also they sold some of their maturing investments, which came out to be about $30 billion. Finally, for their net cash provided by financing activities, we can see that that came out to be about $12.4 billion, $10 billion of which is just funds that they were holding on to at the end of 2020 that are payable to customers, as well as about $6.9 billion that came from borrowings. Second to last page that I want to look at is page 161. And on this page, we can see their revenue breakdown by geography. And we can also see that most of their revenue comes from the United States, with of their $21 billion of net revenue in 2020, $11 billion of it coming from the US, and then $2.3 billion of it coming from the UK, and $8.1 billion coming from other countries. And their revenue in each region that they pull from geographically has been increasing since 2018. So they're definitely improving their market share as time goes on. And the last page that I want to look at is just a pretty simple statistic, which is the second to last page in the annual report that just shows their stock performance over the last couple of years in comparison to the S&P 500 index, as well as the NASDAQ composite index. And we can see that PayPal has outperformed both the S&P 500 and the NASDAQ since 2015 by quite a bit. So for people who were holding on to PayPal as opposed to the S&P 500 or the NASDAQ, they luckily were able to beat the market. So it's great for them. That's pretty much all I wanted to talk about in regards to PayPal. Let me know what you guys think about PayPal as an investment, if y'all are holding on to any shares of PayPal or plan on investing in it in the future. Subscribe to the channel if you haven't already, and leave a like on this video if it provided any value to you guys, and I'll see everyone in the next one.